Hey traders, Raghee here, and in this recap video for Simpler Futures, we're going to cover the 30-year. Now, I haven't talked a lot about the 30-year, and I haven't been actively trading it, and that's because it's not behaving in the way that would lend itself well to trend following, which is predominantly, whether it's a 5 or daily time frame, 5-minute or daily, that's predominantly what I like to do. So what we have today is a little different than what we've had in the past. It's still a choppy market, but it's done the one thing that choppy or sideways markets do to get my interest, and that is it's tested double Darvis lows at an oversold level. So what we really have here is a triple bottom. One, right here, 1, 2, now 3. Now the previous visits have resulted in pops, and that's exactly what I'm looking at here for the third time. However, the way in which this market sold off was a little nerve-wracking because, you can see here in just 2 days, we've covered a lot of ground and we sank at rapid speed towards that 149 level. So we have a couple choices down here. One, we can try to confirm this with an oversold stochastic, which we did, and it is confirmed. And two, we can consider what buying a at-the-money call option from 149 would provide. And again, the price level itself is no surprise. We know the previous lows were 149.7. This low here was 149.8. So we know that we get down to 149.10, that area, 7 or 8 were the previous lows. We're going to start to look for where this market would catch a bid. We actually went all the way down to 149.3. So a whopping 4 more than the previous lows. So we're still very much in the vicinity of expecting the bounce. We did not break 149, which really is a big deal. So we held that and we looked at the at-the-money call. So this is a very good example of when we have sideways markets, choppy markets, range-bound markets, our edge, as I like to say, is at the edge. And that means the edge of the range, which is either the support or the resistance. Now, let me make a couple points about the resistance. It's not terrible resistance. We have a layer here of resistance and a layer here, but you can see it's not as tight as the 2 layers we had right here. These are almost identical, the layers of support. So it's a very good, what I call solid support level, while this would be considered a little bit more soft, right? A little softer versus a solid support. But up around 155 or nearing 155, we might start talking about that level becoming overbought, and then we'd be at an edge again. So in choppy markets, you really have to be ready for either side. You have to be ready for possibly the overbought at the ceiling and the oversold at the floor. And I will add one more thing, okay? Another thing to consider. Respect the trend that was. Now, I would not consider this to be an awesome trend, but generally speaking, this has been moving higher more so than lower. So I'm going to have a little bit more favoritism for the buy here, a little bit more favoritism for this and a quick bounce than I would the sell, okay? Because where we came from was more about moving higher, okay? So respect the trend that was as well. And we are now long via at the money 149 calls in the March 30-year. So follow along and let's see how far this bounces.